Hello and welcome. You're watching ET Markets Trade Talk. I'm Tanya Aneja. Well, traders are the ones that truly understand and track Dalal Street's pulse by the minute. They track every move and trigger to stay ahead of the game at all times. However, it's not a cakewalk. It takes years of learning, mistakes, and strokes of luck to make it big on the street. And today I have with me a very special guest who will share his journey, his learnings, and much more. Well, he's an investor come trader. He's also a TEDx speaker, and you can call him a bearish trader and a bullish investor. Well, we have with us Abhishek Kar. Thank you so much, Abhishek, for joining us on ET Markets.
Thank you so much, Tanya, for giving this opportunity, and thank you, ET Markets.
So let's start with your journey, Abhishek. I mean, when did you start your journey in the stock market as a trader? And do you recall your initial years in the market? I mean, what makes you a bearish trader?
So, Tanya, there's a story behind this. It has been more than a decade since I've been into the markets, speculating as well as investing. More of a speculator, less of an investor, to be very frank. Now, when I actually started, so I don't come from a family which was ever into the business of stock markets. In fact, it took me almost 6 to 7 years to convince them that, yes, this is a legit profession, just like a lot of other people. So now what happened is when I started, I was introduced to this concept of stock market by one of my professors who was teaching me business studies. And that is exactly when I got fascinated by the stock markets. Long story short, first 2.5 years, I've just made losses. Although I had some beginner luck where I made like 30% in less than a week, I guess. That was purely beginner's luck, taking undue leverage and all that stuff. But that entire process took me a good amount of time in order to understand what markets actually need. Going ahead, what I realized is until unless we don't emphasize on learning, we don't understand what is technical analysis, we don't work on our psychology, risk management, and all these things, we cannot prosper after being a trader. And that's one of the reasons why I took a break from trading for a while. And I devoted a lot of time reading books and stuff because internet wasn't that big at that point of time. It was just coming up. It was an era of Orkut. I seem to be a little old while speaking of all these things, but not that old also. So it was like Orkut, Yahoo Messenger, and all these stuffs were there. Now, since you asked one particular question, why bearish trader and this thing, which is also mentioned on my Twitter handle. See, what happens is, Tanya, when a trader starts his journey, that trader starts resonating his personality, his or her personality, with the style in which they make most money. So, to build up a perspective, 2022 February, I made a good amount of bucks. We all know the entire markets were into panic because of the Russia-Ukraine haphazard, but somehow I made decent bucks out there. 2021 again, strangely February, I made good amount of money. 2020 again, so I'm just realizing, okay, it's also February, Feb, and March. If you remember the COVID panic which was happening, and then we had back-to-back lower circuit again. 2019, I guess, January, Feb. So more or less, the point is that when the entire world is busy celebrating Valentine's Day, I probably make good amount of money around the Feb month shorting the stocks. And that's how I derived that, yes, being bearish helps me to make a lot of money out of the markets. And there's also one thought process which you must have heard, that bulls take the staircases, but bears take the elevator. And that is precisely how I make a good amount of bucks. And that's why a bearish trader. But why a bullish investor is because when we think of a long-term basis, I'm very, very bullish on India. But in short term, I do understand that there are a lot of crappy companies which often are there at insane valuations. So I try to find out those using technical analysis, wait for the right opportunity and short. And that's why a bearish trader and a bullish investor.
Okay, now I know why you call yourself a bearish trader. Okay, and now that you have so much experience, I mean, what strategies one should follow to become a successful trader, or any hacks that you would like to recommend to our viewers?
Sure. So Tanya, the very first mistake which a lot of newcomers, or for that say even intermediate players, do is they are hunting for holy grail strategies. Let me tell you, even I was at that stage where I was hunting for, okay, should I be using price action? Should I be using indicators? Should I be using algorithmic trading? Should I be use and whatnot? I've tried almost everything. What I've realized is trading is not even about strategy. Strategy is just 20 or 25% of it. Rest, everything falls into psychology and risk management. The point is, if you're so let's take an example, you find the best of the best strategy. Now, irrespective of how good the strategy it is, there would be times where there would be drawdowns, there would be some negative days. Now, if you don't have psychology and risk management at place, whatever you made in 10 trades, one single trade can wipe off your entire account. And that has happened with me in the past also. Not exactly wiped off the account, but yes, substantial amount of losses. So talking about some quick tips for all those people who are listening to this thing. First, you have to define your own setup. Don't blindly follow anyone. Everyone has a different journey. So I made a good amount of my fortunes with futures trading. There are people traders who made good amount of money by option buying also. There are these days you can find people who are hedging with options, option selling, option writers. Then there are people, for example, George Soros made his entire fortune by shorting currencies. He's also primarily a short seller, by the way. Paul Tudor Jones, he also made fortunes by shorting commodities. So the common theme is not just shorting. The common theme is that irrespective of whatever style you take, just fix onto it. So just don't see that Abhishek is doing futures, so I need to do futures. No, you try to introspect, you try to see, you try to work with smaller quantities and try to figure out what is working for you and what is not working for you. Third, the most important thing is journalizing. Now, this is precisely where you actually write it down. I used to personally write it down on the paper. Now, obviously, there are Excel sheets and a lot of other stuff. So try to maintain, because we human beings often tend to overestimate our memory. For example, Tanya, if I ask you 3 days back, instantly tell me what did you have in your lunch? Can you recall? So we can't, something which we love so much, food and food, we can't recollect what happened 3 days back. How the hell we can think we can remember 20 days old trades? Although we assume that we remember, okay, this had happened, we fairly don't remember. But when you start noting down, it's the same principle what we use in revisions, and in the schools also they try to use it. Just write it down every weekend, just go through it so that you understand what was your biggest blunder, what did you learn out of it, how you could improve your setup. And this is exactly what changes your game. So that's the third thing. And the fourth most important thing is, please keep a stop loss into the system. A lot of people, they just, when you are trading, it's very important. See, people talk about value investing and all, that's a different game altogether. Trading, it's just for a day, for 5 days, a week, or max a month or 2 months. So within 2 months, a lot of things can happen. I still remember a few of my friends, they were into one NBFC stock which was quoting around 450, 460, and they were so overconfident that didn't keep any stop loss. They were into futures. The very next day, it opened 60% gap down. Unbelievable kind of losses they made. Another IT company in 2018, it was also into FNO, and because of just one WhatsApp message, the very next day it failed by 72%. It went down. Just imagine if they would have kept a stop loss or at least hedged their positions, they would have saved themselves. And a lot of people might say that, oh, it fell 70% down, how could we place stop loss? It didn't fall 70% the first candlestick. Okay, it took time. It took from 9:15 to 3:30. Even if the first tick, people could have booked 15% loss. 15% loss is much, much better than losing 70% of the capital. So these are a few things which I would like to give away to the viewers here.
Absolutely. I think keeping a stop loss is so important in the markets, and especially the markets we are currently seeing. So, which
True.
was the first bad phase in the market that you remember clearly, and how did you navigate it?
Okay, so see, since into the markets for more than a decade, so I have a lot of bad phases. But the prominent ones, I'll talk about two or three over here quickly. One was, I was anticipating about an IT company's results. And these were the days when IT companies were always looked after, in the sense like the first ones to put the results. Even today, the same thing happens. That used to set the guidelines for the other IT companies. So there was this one prominent IT company. I had analyzed almost 40, 45 quarters, what exactly used to happen. Based on probability, I went all in with options. And after, I guess, 30 or 35 quarters, for the first time, that particular company didn't deliver as per the standards. And there was a complete turnaround over there, in the sense I lost almost 40 to 50% of the premiums on the very next day. Now, there were two mistakes which I later on realized. First one was that before every event, if you're buying options, there is something called IV. To simplify it, options are expensive before any event, be it an RBI policy, be it an quarter result, anything. I didn't know at that point of time. I never went into Greeks and all those things. So the very first mistake is buying options which were already very expensive. And the second mistake is trying to calculate what could be the result. The lesson which I learned from this thing is no one, literally no one other than insiders and the promoters know what the result is going to be and how the markets are actually going to react on it. So the best solution is, even if you are just betting over the results, I would say betting, because it's completely uncertain. You can't say that I'm doing a technical analysis on the result. No one knows this thing. So the better approach would be wait for the result to be out, wait for an hour or two to see what kind of price action setup has been formed, and then you can take your trades, because ultimately market discounts a lot of those things. So that was one event. Second one was, in the stages of trading, you often get into the stage of arrogance. And that was precisely what was happening when I was doing my post graduation. So I used to hardly attend my sessions. I used to sit in my library. The reason why I was sitting in library was not to read books, but because that was the only place with a good LAN connection and good internet connectivity, and I had to trade. So that was the only reason. Now, how the arrogance took over me was in the college time itself. I'd started earning good amount of money through day trades. Now I was so arrogant. What I was trying to do was, I was just trying to. So let's take an example. If I had a capital of let's say 100 rupees, and on 100, if I'm making 20 rupees, that is 120. The very next day, I would use the entire 120 for the next trade. Now, if that 120 turns into 140, I'll use the entire 140 for the next trade. So as long as things were into my favor, I was making pretty good bucks. And one fine day, I'd also imagined that, okay, now I need not to do anything else. My life is set. Now I just need to do this stuff. And then one fine day, I realized that I am stuck into a wrong position with some banks. And then the banks are moving against me like 5-10%. And since I was heavily leveraged, I lost decent amount of money out there. So the important lesson out here is, overnight positions, even if you're holding, please hedge your positions and don't get so overconfident. In fact, when a trader is getting back-to-back successes, it's time to be more vigilant, because there is a possibility you might incur any sort of mistake, because now you're into a comfort zone. And that's precisely when market gives you a slap. And I'm glad that market gave me a slap at that point of time so that I could improve later. But now that's how market makes you humble.
Absolutely. And also, Abhishek, what would be your advice for all the young and new investors? I mean, the markets are volatile right now. Any mistakes that they should avoid, especially at this point in time?
Sure. So when the markets are volatile, the biggest problem for a lot of people is in order to identify where to put the stop losses. So the first thing is, if you are not able to identify accurately based on your setup where to put stop losses, just reduce your position size. So for example, whenever I'm not confident enough with the market sentiments and everything, like kind of volatility, what I try to do is I actually reduce my positions. So in the sense, 1/10 of my positions. If initially I was going with, let's say, 1 lakh quantities, I'll start going with 10,000. So first, reduce your this thing. Second, most important thing in today's era, Tanya, I would say, is stop looking for people around social media who have been flaunting around with their trading stuffs, for two reasons. First, I'm not saying everything is false or something. Of course, 90% off it is, because the owner of the biggest brokerage house says that 98% people are losing. And here, when you go on social media, you realize everyone is making money. This messes up with your psychology. Initially, I said that 80% is about psychology. Now you tend to feel, oh my God, everyone is making money, and am I the only one? Don't worry, you're not the only one. In fact, most of those people are also not making money. You just have to focus on consistency. Someone's 1 lakh rupees could be on a capital of 10 crore. For you, that 1 lakh, if you try to aspire to get 1 lakh on 10,000 rupees, it's completely unrealistic. Look from a percentage basis. So please don't get washed away, brainwashed by all these things. That's the second thing. Third, yes, if the markets are volatile, if you don't understand anything, do something which I did almost 11 years back. Shut down the screen, uninstall your trading app for a while, and go and read stuffs. That's the most important thing. This is the time when you can enrich your knowledge. You can understand. Because what happens is, a lot of people, when especially newcomers, and when they're coming into this market, they might get a lot of demotivation when they're seeing their stop losses getting frequently hit. Because one day it's a gap up, another day it's a gap down, then suddenly something happens in Russia, Ukraine, then Fed, and all those things. If you don't understand, see, market is not going anywhere. One thing which market has taught me over here is, you will always find an opportunity. And market was here 30 years back, 20 years back, and it is bound to be there for the next 60 years. Don't worry about that. Shut the screen. The best investment which I did was into reading books which were related to markets. And that has some, so I wouldn't say if you read books, you will become an expert trader. But that base, the strength of that base will be multifolds if you are able to read some good books on technical analysis. So that is what I would recommend everyone.
Okay, all right. So much to learn from you. And on that wonderful note, thank you so much, Abhishek, for sharing your valuable thoughts and for being with us here on ET Markets today. Thank you so very much.